We have often observed that market reactions to incoming years or forecasts tend to be exaggerated. Quite often, traders price in events whether positive or negative before the publication. And this was the case with the US dollar's growth during Donald Trump's presidential campaign. And this fact continues to boost the greenback. The fact is that Trump's win suggests domestic tax incentives, external trade barriers, accelerating inflation, and slowing or even pausing rate cuts by the Fed Reserve. But is the US economy able to go on growing steadily with the high interest rates? Perhaps macroeconomic data released in the coming days could often some clues. Let us look at the reports that will be published on November 25 and 26 and find out how they may impact traders' sentiment. You're watching Traders Calendar. At the beginning of the week, there are a few important macroeconomic reports. However, even secondary data can indicate economic trends. For instance, German statistics in recent weeks have reflected challenges in the Eurozone's largest economy. The Business Climate Index, which is slated for release on a Monday, may confirm this. However, in October, the index increased for the first time in 5 months, reaching 86.5 points. Some analysts expect it to rise higher given the euro chance to counter the US dollar. As I mentioned earlier, the US economy has been resilient against high Fed Reserve interest rates. On a Monday, reports on a regional Fed Reserve activity could confirm this. For example, the Chicago index is expected to improve to minus 0.15 points, adding to the dollar's strength. The US dollar could gain additional support if the dollar Fed Business Activity Index exits negative territory. Projections suggest a sharp rise from a minus 3 points in October to plus 1 points in November. On Tuesday, reports will focus on consumer activity. Since consumer demand drives the economy, a decline in retail sales would signal broader economic difficulties. The UK retail sales data is expected to show a deeper contraction from a minus 6% to minus 9%, and this likely to cause a decline in the pound sterling. As we know, demand drives prices. A drop in the US housing prices suggests that consumer demand in this sector is falling. In September, the housing price growth may slacken to 4.5%. If this happens, the US dollar could experience a slight decline. However, just an hour later, the US dollar could find support in a positive macroeconomic data. For instance, the Consumer Sentiment Index may show a rise, and this index reflects the degree of confidence households have in the economy. As long as American consumers are willing to spend their income or savings, the US dollar will gain value. The housing sector is a weak link in this picture. Here, the data may contrast sharply with the other retail figures. For example, from September to October, US new home sales are projected to fall significantly from a plus 4.1% to minus 3.6%. And this report could negatively affect the greenback. The main event for the United States and the global markets will be the release of the Fed Reserve's meeting minutes. The document could contain views of Fed officials on rate prospects. After the meeting, Jerome Powell stated that the US economy was demonstrating steady internal growth and that there was no urgent need to lower rates. However, if some policymakers' opinions differ significantly from this stance, the US dollar could experience heightened volatility. Please note that the time of publications is set in a Moscow time, GMT +3, and the next video review of our Traders Calendar will be released on a Tuesday, November 26. How we're going to be in the short term in the financial markets, you definitely learn in our video review. Subscribe to the channel and follow news with us. See you!